And we are live. Roy, how's it going?
Good. You?
Open door in the title, peak bubble. Yes, this is. I'm trying to get all the degens in one place so that we can talk about sports betting and meme stocks together.
By the way, if you guys are new to us or if it's been a little while, the way that we do this, we have a few topics that we'll discuss on the front end. A little bit. Well, we got a couple of longer ones tonight, and then one shorter one, and then we open it up for Q&A. So if you guys ask questions that are related to what we're discussing, we'll answer it then. Typically, otherwise, we'll save those for the end, and we'll try to do those rapid fire. Although I suck at doing rapid fire. I like long answers, so and Tevis is not as bad as I am, but he can be a little more succinct, thankfully.
Depends on the topic.
Lemonade.
Is it my internet that's bad, or is it Roy's? I don't know.
I always blame the other guy, so I'm going to say you, but yeah, it could well be me. Did I break up for you there, or did you hear all of it and it was choppy?
I think it's fine now.
Okay, cool.
And as always, you can ask your questions and we'll bookmark them and address them at the end. I saw that Alex Chris tweeted something about shock the world, and do you want to respond to that first, just before we get in?
Like, we can do a little preview. I've got it pulled up here so people can see. Now, infamously, when he was pretty new as a CEO, he mentioned that they were going to shock the world, and what they rolled out I thought was pretty compelling, but not a world shocker. And of course, he didn't mean shock the world with that event over the next year, but as they execute, and again, he was into it a long time. That's what they did. Now, he has been very cautious and with guidance, with what they promise. Basically, they have direct line of sight on. It's not something that's like, well, if this works out, then we're going to grow like this. And so you see that reflected in guidance. You see that reflected in a lot of things. So this is a different change of tone. Now, he does, get excited, and you can tell. But yeah, I'm guessing, earnings is next week. It's going to be on Tuesday, same time as SoFi. By the way, Tevis, I'm not going to do market open with you and with Tanner for SoFi. Couch Investor and I instead are going to cover PayPal and SoFi. We're going to listen to the PayPal earnings call while these guys listen to probably what will be a little bit more exciting SoFi earnings call. So you have to pick, and these companies for some reason have to report at the same time. Every single time. It's annoying, but yeah, that's the reality of what we're at. We figured, hey, we'll cover PayPal because this is a.
Wait, so do I understand this correctly, Roy? Since both calls are at the same time, you're actively choosing to listen to PayPal's call over SoFi's call?
Yes. You know why?
Please tell me.
Because we already know SoFi is going to have a freaking incredible quarter. We know that. So there will be some surprises, I'm sure, and some things that they mention and drop and tease. They've actually done a lot better over the last few earnings calls with that, talking about and giving us updates on the tech pipeline and everything. But we already know what we're getting. It's a phenomenal, amazing quarter. It's kind of the same thing. So for me, like HIMS, out of all the companies I cover, it has the most pivotal earnings. I think Tesla is actually maybe number 2, which we're going to talk about here a little bit later today. But yeah, with SoFi, it's going to be amazing and great. And I'm the most confident actually in SoFi out of any companies that are reporting, period, even over Robinhood, just how stellar and ridiculously good that quarter will be. Part of that is a weak year-over-year comp, but that's not taking away from what they're doing. They're accelerating on all cylinders. They have so many headwinds that have shifted to tailwinds. And so, like, I already know. So it's I hate having to choose. I hate it. And we'll look at both in the front end, but I'm like, hey, somebody needs to cover PayPal earnings call. And I think it will be really good. That the way that they guide and what they say as far as indicating some of these early looks at things that they've launched, such as advertising, that is going to be pivotal. That is the big wild card here. Now they have a lot of omni-channel stuff. They have the Big 10, Big 12 stuff, minimum monetization, Fastlane, a lot of stuff that I'm like, I don't know. So that's why I'm choosing to do PayPal. Is just there are more unknowns for me, and the expectations are super low on that too. So this isn't like a make or break quarter for PayPal. That is quarter 4. If they don't reaccelerate by quarter 4, we'll actually see reacceleration, by the way, in quarter 3. But it's all comes down to guidance in this. So we'll have to see. But I've chosen also. Let me pull this up too,
And
because it's relevant.
Might I add, while you're pulling that up, that not only will you abandon me for SoFi earnings call, but you'll also abandon me a second time because Palantir reports at the same time as HIMS does.
Yeah, that one's, I don't know. I usually don't cover Palantir's earnings call live, so I might do HIMS with you.
Hey, that could be fun.
Yeah, Palantir is, well, so throw this up real quick. This is my portfolio. It's changed a little bit since Friday at close. Robinhood is actually my number 1 position now, and SoFi and PayPal are very, very close. They're neck and neck. Palantir is actually smaller than either of them. It's the 4th largest holding. So if you go here, it's changed a little bit, but PayPal is still my number 2 holding. It's actually closer to 20% because of the movement of some of these. So when you have more on the line too, that also gets your interest. So, I do have more Palantir, but there again, like it's kind of a certainty thing, right? Palantir's earnings call is going to be more entertaining than HIMS. It just there's no better earnings call out there. Maybe Robinhood, but I already know what they're going to do, and it's going to be freaking incredible. It's amazing. HIMS, this is the most pivotal quarter for them. It is the most important earnings call that they've had since I've been an investor, and probably that they will have over the next several years. So I'm going to pick HIMS that day, brother.
All right. Well, we welcome you with open arms. Myself, Elijah, who is watching, and Nate are going to be covering it. I am probably going to be skipping a day of work to cover it. So you know where my priorities lie. And it's going to be a lot of fun. I don't disagree that Palantir is going to be like a more interesting call. I think more companies need to get into the habit of recording their calls. I'm really glad that Hood is now doing it as well, and I hope more companies follow suit. It's just welcome to the 21st century. But I agree with you. I think HIMS is set up in such a way where now that there's this increased uncertainty with regards to lawsuits and whatnot, like it's going to make for a really nice call, especially with regards to their international expansion in Zava in Europe and also in Canada, all their new team members that they have on their leadership side, and the new product lines that they have towards the second half of the year. I think it's going to be really exciting stuff. And I wouldn't be surprised to see them drop more news around like testosterone or menopause or something like during that same day and drop a press release. So we'll see what happens there.
Yeah, that's the thing is HIMS. A lot of companies like Tesla, they will not do product releases or anything like that in earnings. And that's pretty common. HIMS just does it all. So that one's going to be not as exciting as far as entertainment value, but it's super exciting because there's a whole lot of unknowns and question marks in my mind. And not all bullish, but there's a lot there too. So I see somebody asking if we plan to wait on HIMS earnings to add more or trim. Tevis has, I think, $10 to $20 million invested already, maybe 50.
Don't say that.
Not really, guys. It's all a jest. He is well off, but he's
10 to 20 million shares, maybe, but not dollars.
Give it a few years, maybe he'll be a billionaire then, but not right now. But he has a big HIMS position. I actually bought HIMS. I added more to my HIMS on the news of the what was happening there with the flywheel stuff. Like that got me really excited. The testing, what they're doing with Tribe Labs. Like this is a great addition. I was already selling cash secured puts, which have not filled. And I'm like, I'm just going to add more now. Yeah. And I'll go into earnings likely with some cash secured puts. And if they fill, that's fine. I actually kind of expect them to, because this is a bit of a trap quarter. If they do too good, then it increases the odds of the lawsuit in my mind. And if they don't do well at all, it's also not good. So we'll have to see. But yeah, I'm comfortable with where my position is right now.
Yeah. I was talking to the guys earlier today. Yeah, Elijah brought up around the covered calls on HIMS over earnings. Man, you have no idea. It was like 87 cents premium for what was it, Elijah? Like a $75 call on August the 8th. So like 3 weeks from now, basically, you're still getting over $1 in premium for $70 calls and about 84, 85 cents for $75. That's like $25 away from where it's trading at. And you still get such rich premiums for like a 50% move in a couple weeks. It's just,
yeah. I'll sell some. So since I have, the way I do HIMS is I have a core position I don't want to get rid of, period. Like, doesn't matter what the price is. I mean, it does. Like if it hits like $500, like, okay, thank you, HIMS, bye. It's like, it's done what I expected over the next 5 years. So why would I, unless there's some crazy news that pumps it that way. But realistically, I have a core position I don't want to lose at all. And so I'm very cautious, and I might not even sell covered calls on it. But I have some where it's like, well, if it gives me a 50% increase, 60% increase, I sell in and out of those. So
well,
that's the way I do it.
For me, it's like I have sold tranches of HIMS before, a lot of shares actually, but they've always been shares that are in my like short-term wheeling portfolio. If my covered calls get breached, then I'll just let the shares go, or I might roll once or twice, but I'm not really going to, like the goal of that particular portfolio is just to cash flow. And as a result, I'm also being more aggressive with cash secured puts in that same portfolio as well. So if those get hit, then I'll have a HIMS position again in that portfolio that I'll be flipping, for $5, $10, $15, whatever. But the long-term portfolio, I just want to hold, and I don't want to write covered calls on that because it's HIMS. I mean, they can get taken away. And I think Sagig is right here. Like if it does go over 75 in the next 3 weeks, it's almost certainly a short squeeze and will likely go much higher than that because this company does have like 35% short interest. And Elijah's absolutely right. The gap must fill, and we're consolidating, and it's going to happen, man. It's going to coincide with earnings. You're either going to get a massive move up or a massive move down. The implied volatility is going to make it so that the move is going to be at least 15% up or down. It's going to be quite volatile.
Yeah.
Which makes for good entertainment. So we're going to be covering that earnings.
Yep. It's going to be exciting. And so, I'll stick with you on that one. Palantir, amazing, incredible company, but I know what they're doing. So I'll watch that one later, which, by the way, if you guys have not seen a Palantir earnings, even if you're not in the company, like just watch one. It's great. Like so great.
Yeah.
And I do think, to your point, we see Robinhood do this too. HIMS has been a little bit more retail friendly and open. I think that increasingly so, there's going to be a lot of companies that shoot this way. There's going to be some like SoFi that will not, and that's fine. Not every company needs to, but having that so that we're able to like see them in person, it's great because most of communication is body language, and if somebody's there like reading off a script and they're you can hear it, but like you can see how they're reacting to what they're announcing, whether or not they actually believe it or not, whether it's credible. You can put faces to names.
Yeah.
It's awesome. And also, the way that there's actually been a shift over the last 6 or 7 years towards more openness towards retail, like asking questions. Say Technologies is a piece of that, which Robinhood owns. But even allowing people to ask questions during earnings calls, HIMS is now doing it too. So it's cool. Very good for retail. Retail's a real presence.
Dude, I can't wait for that Robinhood post-game conference again, for them to just be asking, answering questions over here, for somebody, one of us, to be asking questions to management.
I just confirmed today with the guys. I'm like, yep, I'll I'll be there. Not there, but remotely there. So
that's exciting.
Yeah.
Do you already know a question, or are you going to just wing it?
So the way I do it is I do have a question in mind, which I'm not going to share just in case, because I mean the way that this works, like if you guys aren't familiar, is it's kind of like old school conference call type stuff, and I think all the software is just geared this way. So they give you a number, you dial in, you push something to get in there, and then you wait in line to ask your question. And so it's first come, first serve typically. So it's not like, oh, we're going to let Amit go. No, it's just like whoever gets in there first. So since Tanner is always late, he usually comes near the end of that queue. But I mean, it's just classic Tanner. So, and then, we're waiting there. There is a bit of a delay. I mean, honestly, it's a little bit bearish that he's got his hair.
Is it a signal, Vlad? I saw somebody post being like, all right, here's my DGen TA on Robinhood. They're saying the last time Vlad had short hair, they outperformed their earnings on Q1 like 3 years ago or whatever. They're like, therefore, they're going to outperform this time. And I was just like, this is like the Elon tweet counter. And actually, we should take a look at that because Tesla earnings is coming up tomorrow. But yeah, man, all kinds of rumination here. He put out a poll saying if he should keep it long or not.
Yeah, I've got a question related to what they announced back in France for that crypto event. So, but if something else stands out to me, and it's going into Robinhood earnings, like you already know most of what the company is doing just because they report monthly so all but I think 4 trading days going in. Now you don't know margin levels, you don't know like what Bitstamp and TradeMR is actually going to be the earnings call that I know the least. We did our predictions, by the way, last night on Tech Bros Weekly, formerly Robinhood Weekly. SoFi is actually easier to predict, I think, this time. So I'm still working on those, by the way. So maybe that I changed my perspective. I saw yours and I'm like, nope, click away. I don't want it to color me. Because honestly, it does. When I'm like looking, I'm like, oh man, it's going to do terrible or great here. And then I look at yours, the tendency is like, well, maybe I'll be more like Tevis but I don't think that works. Now, if we're wildly off, that's where I'd be like, okay, I need to figure out what I did wrong.
Yeah. That's going to be interesting. I'm looking through Noto's profile to see if there's any Easter eggs, but I don't see any yet. So we'll see. Maybe this week we should watch out for those. Do you guys regret selling out of Bull? Have you seen where Weeble's trading at right now, Roy?
Yeah, 17s, big after hours. I think that this is just, well, partly it's for the same reasons why we saw that Weeble was very bullish, why we got in. Yeah, I still don't like the equity raise. I don't regret selling Bull. Like I missed out on some money, but honestly, I pivoted into eToro, which was a swing. And eToro, like if you look at it, didn't look at it today.
Yeah, look,
yeah, it's pretty decent. I actually sold that for a profit. I got into AEHR. I mean, like, did you see this?
So I actually want you to talk about that on the show because I have not seen it, and I want to hear you talk about it because I'm always interested to hear new plays that you have. What I will say on Webull, just real quick, just to finish that out, and I'm going to leave the rest of the questions, including the Lulu questions I could just ask for the end of the show. But on Webull, I think, look, I understand that it's up and we missed out on gains, but that's the double-edged sword of investing on actual business fundamentals and actual like underlying. Like I really, really, really love the business. I love the growth rates. I love the prospects. I love their roadmap for growth. I love so many things about them. And it's because of that I ask myself, why would they do this deal with this very shitty company when they have options? And yeah, the stock could go to $50 tomorrow. And I would probably feel bad about it because, I missed out, but I would feel like very similar to like me missing out on a sports bet or something like that, because at that point it is a lot of luck. However, if the fundamentals were like fantastic and the stock was going down, then it'd be similar to SoFi, right? Where I'd feel good about it. And so I can't really let the price action dictate how I feel about a position if I sold early, because the reason why I sold was based on the fundamentals, right? And so that's a double-edged sword. Like sometimes they're going to go, like they're not going to trade in perfect synergy, the stock price and the actual business prospects. And that's just that. I think even at $17, at $20, at $50, Webull, in my mind, will still have that risk and that overhang of having that shady partnership. And I'll still be uneasy because I'll be left wondering, like, when is the next shoe going to drop kind of thing.
Yeah, I don't regret selling. Like it's one of those things where let me find this right. What says there's a famous grid. All right, let me put this up here. And this works for like everything, not just for investing. And I'm not sure what the LMW but so you can, as you go through life, and investing is like this too, that you have to measure process versus outcome. So you can have over here bad process and good outcome, and that's, you can call that a lucky break. Probably all of us as investors have had those where I've had some big gainers off of lucky breaks, and I'm like, in hindsight, I'm like, oh man, I got that completely wrong, and yet it did great. That's incredible. Bad process and bad outcome, well, it's poetic justice. You go in and you're like, hey, look, the stock price of this is really low, so it can go up a lot. It's a pretty bad process, but you might be right. But it usually, it's going to be, that's a lucky break if it does, poetic justice if it doesn't. Good process, but bad outcome. I don't like to use the word luck, but I mean, bad luck. Like that does happen where you're like, hey, you do your due diligence, you look at what the company is doing, everything seems to line up. And then like COVID hits or something and it just crushes you. It's like, well, yeah, what else can you do other than just say, hey, I'm going to continue to develop good and better processes. And then finally, good process and good outcome, which is well-deserved. Now, the problem is, we all tend to think it's like, yeah, 95% of my life and gains and everything good is all well-deserved. Whereas the reality is it's some combination of all of this. So for myself, I see Webull as one of those things where for us, it was a bad outcome, but a good process. So it's bad luck as far as the timing of that and everything. Like, yeah, but maybe I'm wrong. You guys can have a different take, and that's personal investing. It's fine.
So yeah, so we can jump to any topic, but at some point I would love to talk about this.
Let's do that first.
Okay.
Then we're going to follow up that with maybe really quickly crypto and then Tesla earnings, and then we'll get into your Q&A.
Okay, all the degen shit first, and then we'll like talk about PayPal for 30 minutes, and then we'll get to Q&A.
No. We've already talked about PayPal. So,
I mean, look, I just answered this. How do I feel about Bull? Just rewind. 5 minutes. Okay, cool. Let's do the open door segment. This was kind of interesting to see this week because I called Tanner on yesterday, and I was asking him something about like SoFi's financials or whatever because I was doing my predictions video, and he's like, "Dude, have you seen Open Door today?" And I was like, "Yeah, it's like up like 50% or something." He's like, go higher. I was like 80%. He's like, go higher. I was like 100%. He's like 110%. And I think it peaked at like 120% in a day. And I was like, this is insane. And I went into a couple of meetings. And by the time I came out of the meetings, it was like 3:30. I was like, let's take a look at Open Door. Just got sliced in half, like down 50% from it's just absolutely crazy, man. Like I don't know what to make of it. It is very meme stocky. And it reminds me of what you were saying a few weeks back, where you were saying like, hey, this is strike one, this is strike two, that we're in an overinflated market. And the reason why I wanted to bring this topic up is this strike three? Because I think what was strike two for you? I think the Chamath SPACs was strike two, and then something else was strike one.
Yeah, so I don't think of it as like 3 strikes and you're out. I do have a fairly recent video on like identifying market tops and local tops, and I actually full disclaimer, like that's a recent video, like 5 days ago. So this Open Door like moving was part of that, although it had not moved nearly as much. But I went in thinking, yes, we're probably right there at a local top, and then looking at the fear and greed index, looking at RSI, looking at some qualitative rather than quantitative indicators as well. I actually came to a different conclusion while I was researching for that video. And I'm like, okay, I don't think that we're at or market top near. By the way, local top is, if you're not familiar with it, it just means that there's likely to be a pullback at some point, 5, maybe even a 10% pullback. Those happen in bull markets all the time. Doesn't mean the bull market's over. I don't think, barring Trump, he's always a wild card, that we're going to see a 19.99% drawdown in the S&P 500. Again, maybe we will. I hope not. I have cash on the side. I'm ready to buy, but I think that we're probably weeks away from a local top. Now, Earnings is the wild card, and it could be, as we see a rotation into stable, good companies that are performing simply just because they're able to issue guidance. Although that's the opposite of what we're seeing. Right now, we're seeing Netflix get sold off. We're seeing ASML getting sold off despite beats and guidance. Not perfect, clean quarters, although for Netflix, it was very good. So that's something to kind of keep it and pay attention of as it relates to Google and Tesla this week, which a lot of eyes will be on. Open Door itself is down 10% after hours, then 10% today. Over the last 5 days, though, it's up 148%. At one point, it was up 313%. So one of the challenges of a company like this is it's not based on fundamentals. There's not some news that came out that made people bullish. It's another really a hedge fund guy, but more of a retail guy, honestly, who called Carvana, which he was actually right. It's one of those companies that I'd written off, and I was like, oh, this is a not a high quality company. I wasn't too interested in the play at the time, and so I just was like, yeah, if it's moving, it's moving, and it's up a ridiculous amount. And a lot of that is because it was written off for the dead, and it was not dead. It's a decent business, and they're actually EPS profitable. I do have some question marks, and it's trading at a ridiculous premium, so I wouldn't chase that one. But Open Door, his thesis was kind of the same. It's like, hey, it's undervalued, ridiculously so. It's a great opportunity. And there was legs of his thesis which made sense. And they're not going out of business anytime soon, but there's some legs that made absolutely no sense. And one of those was, hey, Federal Reserve cuts rates, then that'll galvanize the housing market. But that's just dead wrong. It's not how the 30-year mortgage rate works at all. It shows a fundamental misunderstanding, which frankly I had back in 2022 and 2023. I corrected it last year, or not last year, 2 years ago. But that doesn't mean, again, when I made a video and talked about Open Doors, like you can trade anything. It doesn't have to be on fundamentals. It can be for any reason. You can make money off of anything. And if you did, congratulations. That's awesome. But be careful about holding companies like this, especially when people are putting out wild price targets of $83. Sometimes they just want you as exit liquidity and they want to pump their own backs, which that's the nature of the market.
Yeah, I mean, look, at this Open Door situation, I think there's a couple of different variables that are playing together, and some of them are valid and some of them are not. And the fact of the matter is that similar to Open Door, there's dozens of companies that are undervalued, underappreciated by the market, have been oversold for years, and have been on a steady decline. SoFi was one of those companies as well. And the fact of the matter is, you can find true value in some of those companies if you care to do their homework and say, hey, wait a minute, this thing doesn't make sense for where it's trading relative to where the business has progressed. Because the last time that I personally took a look at Open Door financials was 2021. And so that's the first side of it, is saying, is this company actually undervalued relative to where the business is today versus where I thought the business was 3 years ago? Have they grown into that valuation? And is this underappreciated by the market? But then I think the more worrisome part of this is this entire movement around Wall Street bets and the institutional shorting that's allowed, and basically being this, like, the stock is a battleground and it's a proxy war between these hedge funds that are trying to short a company to the ground and Wall Street bets that are trying to stick to these hedge funds. And then you have your company become a martyr for this like liquidity, war back and forth. And I saw it with, what was the other stock? KSS, I think, was the other one. Rocket companies, it's now starting to move. And that's the thing that's very reminiscent of 2021, because they're massive moves and the massive volatility swings back and forth intraday even. It's not natural for any stock, regardless of how good it is or how well it's executing, to move triple digits in a single day. There is no company on the basis of their earnings that moves 100% in a single day, unless they were extremely underpriced or there's something fishy going on with regards to the volume coming in and out of that company. Open Door was trading over like 1 billion shares at some point, trading hands. It's absolutely insane, right? And so I think that, yes, the primary layer of, is this company undervalued and can I find value here because the market is fundamentally mispricing this company? Absolutely valid. I don't know if Open Door is that or not. I haven't looked into their financials lately. But I think the troublesome thing is the secondary layer of, like, oh my gosh, the short interest is 90%. Let's screw over all the shorts and this thing goes from $1 to $20 overnight. It's just, it doesn't it's not signs of a healthy market.
Yeah, and honestly, like sometimes things are shorted for a reason. Now that doesn't mean it's always justified and it's always an issue when they're shorted. Like Hims, I think is ridiculous. SoFi, the level of shortages there is stupid. And it's not just because I'm in those companies. Like if the short interest is really down low, I'd be like, hey, that's fine too. I'm not like targeting companies that have high short interest looking for a squeeze. If it happens while I'm holding those, hey, great, that's awesome. But yeah, Open Door. I mean, like the CEO, there's some very sketchy things there. There's some really terrible decisions they made actually in 2022, which led to their collapse. And frankly, like I've used the product before. We searched for our home here after we moved down to Houston. We looked at Open Door initially first. We're like, hey, this is a great model. And it was terrible. By the way, I mentioned with this yesterday with Amit and Tanner, this is one of those business ideas, which I think is amazing, but you actually have to execute, and Open Door hasn't. So there may be another business that comes out and is publicly traded down the road that has the same model. We need to be careful as retail not to just immediately say, okay, we're going to write that business off because it didn't work for Open Door. Because I did the same thing from Teladoc to Hims, and that almost led me to just not even consider Hims, except for this guy right here pounding the table every single week on Hims and how phenomenal it was. And I finally was like, fine, I'll look. And he was right.
Dude, look at this. The entire float for Open Door changed hands in a single day. Like, you can't look at that and tell me, oh, yeah, that's totally normal market behavior. Like, that is some crazy stuff that you would not, like, this idea of an efficient market is completely out the window. When you see events like this, they're just unfathomable events that happen every day in the market where small caps are concerned. And it's just so crazy to see. It's actually impressive how crazy it is to see.
So throw this up. This is talking about the other day, so not today. This is, by the way, Sherwood Media. It's free, Robinhood publication. It's worth a read. I think it's one of those that I follow. So most traded stocks in the S&P 500, the explosion of retail enthusiasm. And so you see Tesla, lots of trading, Nvidia, Apple's always shocking me. It says, this is a list of the most traded stocks in the S&P 500 yesterday, July 21st. For the most part, that's as you expect, except we added one stock not in the S&P 500, Open Door. Driven by a flurry of options trading, which, I mean, if you look at the options volume, it's ridiculous. Some 7 billion change hands in Open Door shares yesterday, more than Netflix, Palantir, Meta, AMD, JP Morgan, and 495 other members of the S&P 500. Wow. And it's just like, yeah, it's crazy. And there is
more than S&P 500 volume trading. More than four. Open Door did more volume than the entire S&P 500 except 5 companies.
Yeah, you see this right here? This is Open Door, in case you guys missed it.
Wow, that is insane. And what is the market cap of Open Door right now?
It's tiny.
Open Door is $2 billion in market cap. Holy shit.
Yeah.
Dude, Roy, this thing went from 50 cents on June 30th to $5.
Oh yeah.
On July 21st. I mean,
yeah, people are still up 414%. And there's no hate. Like, honestly, guys, like if you ever like, hey, I'm tired of holding PayPal, I want this. I mean, just be willing to risk what you're willing to lose. If you're not usually a trader, figure out stop losses and how those work. That'll preserve some, or even I don't know. There's a lot of different tools you can use, but I would recommend only risking what you're able to lose. So if it's like a fun bet, Tevis makes fun bets of $100,000 because he's a billionaire. No big deal for him, but for you and I, for anybody else here, like losing $100,000 on just some random bet would be very painful. So, but if you're like, hey, $500 for me is no big deal. If I lose it, I lose it. Have fun. Go nuts. Learn those trading skills. Most retail sucks at trading, myself included. Like that short term, I can do swing trades and I'm okay at it. Long term investing, that's what I'm actually good at. If I was trying to make money off of swing trading or even day trading, I would be losing money. I don't have that skill, and most of us don't. But if you do, I mean, make money the way that you want to make money.
Look, man, there's a couple of ways you can make a 10x in the stock market. You can either buy a compounder a leader in their industry, a company that just keeps putting up higher free cash flow every single quarter, and hold it for a decade. You can buy a small cap company that's underappreciated by the market and watch them 10x, or you can buy Open Door and you can hold it for 3 weeks, and peak to trough, it was a 10x from 50 cents to $5.
Yeah,
So
which is
those are your
amazing.
ways, basically. Pick a lane.
And those things happen. And again, I made a lot of money off of AMC back in 2021. That's not a good process, good outcome, well deserved. That's a bad process, good outcome, dumb luck. But it was still, I had like a 4.5x on it. So that helped me a lot. I had a lot more money to put into Palantir as a result. So wish I had more. All right. So let's maybe talk real quick crypto, and then we'll talk Tesla, and then we'll go to questions. So crypto, couple of things. So I do see some questions, by the way, relating to crypto. If you want to pull any of those up, we can look at those. But have you done anything different in your approach to crypto? Are you just holding what you have? Are you looking to sell?
Holding what I have, not looking to sell. I don't even have my wallet like anywhere near me. It's not even in the same country as I am. I couldn't even access it to like sell funds if I wanted to. It's like completely cold storage. I don't even look at crypto, honestly. I don't look at the Bitcoin price. Now, one thing I feel bad about that I want to do more of is I want to continue DCAing into Bitcoin. I've been really bad about that. I know Matt, who's in the chat, and yourself, Roy, both do DCA, like a percent of your earnings or whatever into Bitcoin. No. I think that's incredibly smart and something that I would absolutely want. I think it was like 2022 was the year where I was like, I want to become a whole coiner this year. And then I was like working towards that goal, chipping away at it. But I should have honestly kept up that habit regardless of what the price is, because I do think that Bitcoin is one of those things where you just buy regardless of what the price is at any given point in time, and you keep stacking. But so that's the only thing I would change if I would change my strategy, but it's nothing that I would like, comprehend selling. Maybe my Solana or Ethereum I would sell to move into Bitcoin. But I think like in my brain, I'm more likely to sell any one of my equities positions way before I'm ever likely to sell my Bitcoin.
Yeah. And I treat crypto the same way as you do. I'm in essence, I don't look at it very often. Now I do look at it when other people are like, wow, Bitcoin, look at like, that's when I'm like, okay, what's it doing? But my strategy, and this is because of Matt Money, who is good at making me money, especially if I listen to him more often. He and I had lunch, and you're welcome to come sometime, Tevis. Just fly down to Houston,
You just let me know when it is, and I'll fly down.
All right. Sounds good. I really will too. But yeah, we had lunch, and he was like, hey, this is what I'm doing, and you maybe should think about doing this. And basically it's a certain percent of his net worth that he was allocating to Bitcoin. Now, Matt Money is made of money, so he makes a lot more than me. But I'm like, hey, what I really miss, I started with 1%, actually increase it up to 3% of my income for the year. I'm like just DCAing that in Bitcoin. It's a weekly buy on Sunday every single time. It doesn't matter that we hit a new, all-time high very recently. Like, still going to DCA. Doesn't matter that I'm like, it's way down. I'll still DCA. Now there have been some times when I'm like, the price wicks down, and I'm like, I don't have enough. I need to go ahead and buy some more, and I will. I also I've gone a little bit wider too. I do think still that there is going to be crypto winners, and it may be a next year thing. Right now, like with the S-bets of the world, with the BMNRs, with of course MicroStrategy, most famous, GameStop, Block, for just company after company, even countries are all basically saying, oh man, Bitcoin, we need to grab some of this. And this is basically a gold rush of crypto. Now, Bitcoin and Ethereum are the two most compelling for that, simply just because they don't have like infinite floats. You have a very finite float, so it inflates less than gold. Bitcoin does, and at some point that stops completely. And then you actually have deflation that's happening as far as that max capacity for Ethereum. It's technically limitless, but the way it's set up with the gas fee. So I did also buy some. So I bought some Ethereum back when Tom Lee first made his little connection, not little connection, but he talked about the ETF, and then he had the interview with Amit, and he talked about stable coins basically being built on the Ethereum system. I'm like, that's actually correct. Good thesis. Now, crypto does not trade fundamentally, but I'm like, let me get some Ethereum. So I bought, it wasn't even a whole coin, but I've added a little bit too, and it's done really well. It's up like 50% since I bought it, which is ridiculous because Ethereum was there for the grab for a long time. I bought some Solana on the similar thesis. Solana does well with stablecoin. There's a lot of action there. Now, that's one that is, it doesn't have a finite cap. There is dilution of about 3 point something percent per year, but it does have staking that's at 7%. So that offsets dilution in my mind. And I'm like, hey, I've not had Solana in years. Let me go ahead and get some of this. It's run up too, because that's what crypto is doing right now. And then I ended up buying some Arbitum, simply because there's both PayUSD is coming to that chain. Robinhood announced that that's what they're using for now for the tokenization. And I'm like, okay, this is another kind of a dark horse player. And so it's a small amount. I own the most Bitcoin. I don't even look at that. I'm not going to sell it. I'm only going to add to it. I could buy IBIT, and I did buy a leap, one single leap in IBIT. But like overall, I have stocks that are very volatile. Bitcoin and crypto is volatile enough. I would rather just own the underlying currency and commodity because, yes, you can make a ton more as things run up, but crypto doesn't always go in one direction. And there will be a winner. And I'm okay, just not even paying attention to these currencies on a regular basis, not trying to trade in and out of them and just letting them do what they're going to do.
Yep.
And 10 years out, we'll see what happens. 20 years, 30 years.
Did you see, and I completely agree, by the way, with everything you said. It's one of those things where I just, I know that prices like $1 million are basically coded in at this point. It's just a matter of when. And it's just, you just keep stacking. Do you see this post by Eric Trump? He's
that's funny.
Doing a mic drop because he said on February 3rd, in my opinion, it's a great time to add ETH. And the first comment is, it dropped 40% after he tweeted that, pal. And then he says, up 35% in 5 months, pal. Embrace volatility. And I'm like, oh my gosh.
Wow.
Man.
Well, so the other thing too, like related to this, is there's been discussions of being able to add cryptocurrency directly into retirement accounts. That in the past, the only way you could have exposure in retirement accounts is either possibly through ETFs, and it depends on who you're using for your retirement account, or through like a proxy like the miners, Robinhood, Block. So this is another one of those tailwinds behind crypto. That's another part of this gold rush. And I think there's going to be a lot of that for a while. So the other big part is Matt Money is buying up like all the Bitcoin. He's like the Michael Saylor of retail. So massive buying.
With regards to retirement accounts, I think you want to tread carefully there, and there has to be some type of regulation around what cryptocurrencies and how many are in.
Probably not.
Like, I don't think you want your kids to be inheriting your fucking dog with hats. Okay, I don't think that's your retirement plan. Let's put it that way.
It's 100% Fartcoin. Any other cryptocurrency will not work. So
it's like, thanks, Grandma.
The Trump meme coin, like, oh my goodness, like hopefully not. But Bitcoin, Ethereum, why not? Maybe Cardano, maybe there's others too. So
okay, we talked about crypto, and this came in perfect time. Tesla, Google earnings predictions tomorrow. Both are reporting after the bell, and let's take a look.
Yeah.
Matt Money just posted this on X. It just popped up. This is my quant. Oh man, what a community. What a community.
Okay, so do you have any thoughts on Google? I know we have some on Tesla.
I don't have too many thoughts on Google. Actually, maybe Matt Money wants to join us because I know he is an avid Google enthusiast. But yeah, Google was up today, up after hours again. It seems to be sort of accumulating a little bit going into the earnings report. I don't necessarily know. Well, I don't own Google. I don't really cover Google, so I don't really have any thoughts on Google other than that. How about you?
Yeah, it's basically kept even with the S&P 500. Actually, slightly underperformed the S&P 500 over the last year. I do think it'll probably outperform. I'm not like a massive Google bear anymore. In fact, I'm neutral to bullish, just not bullish enough to buy here. I don't think that this quarter they'll see that there will be a lot of people that didn't have fears previously with search that have that based on the data. But next quarter might be that quarter. There's a lot happening on the back end with SEO guys, with advertisers as well, and they have some big legitimate concerns. And Google has kind of, the other half of Google beyond search is doing amazing. Like great setup. If that was a company, I'd buy it here. Like, why not? The problem is the search side of the business is deteriorating probably faster than the revenue comes from the other side. And so I think that there might be a greater sell-off. Now, if that happens this quarter, I've got cash and I will become a Google investor. So what I need to do actually before tomorrow and they have earnings is figure out, well, also I'll read and see what the earnings actually says, but I'll figure out where I'm comfortable getting in. I don't think that it's going to drop. If it does much this quarter, probably be a few percent. Now we are seeing, of course, Netflix report good numbers and yet fall even with good guidance. So it may just be that that's the earnings season that we're in. I think we'll have confirmation of that depending on how Google and Tesla do, which is the most interesting part to me.
Roy, let me do a little segue, and we'll come back to Google and Tesla because we just got some breaking news that the audience commented. Uncle Donnie, Donald Trump, completed a trade deal with Japan, whereby Japan is going to invest $550 billion into the U.S. The U.S. is going to receive 90% of the profits, and Japan is going to pay a 15% tariff. What do you make of this?
That's good. I mean, like just the more actual deals that we have, I like that they say completed. Hopefully that's the case. There's been a lot of preliminary, we're working out, figuring out the different things. That is the biggest thing that the market really needs to continue to move forward is certainty. And it doesn't like uncertainty. It's not that it can't go up, but it tends to not. So if we get a number more of these, especially with Canada matters, Canada, Mexico, China certainly as well, and the EU, that's very meaningful, especially if it's a good deal that leads to further investment. I've always been skeptical of the strategy, but it could be that I have to eat crow, and I'll happily do so.
Yeah, and if you have to eat crow, it means that you're winning in the end. I generally like the strategy, and here's why: because it includes foreign investment into the domestic economy for jobs, but also like the final deal that they achieved still has a tariff, and so the tariff is not completely eradicated. It doesn't go to zero. And so there will still be some income collection from that tariff. So I think it's definitely a positive thing. It's going to have the markets rallying. The rally is going to continue as a result of it. And ultimately, we want to see more deals of this nature. The blanket tariffs have been sort of shock and awe to some degree, where he'll just put a blanket tariff with a big, scary number, and then they can work it down. But what we're finding, which is interesting, is that they don't work it down all the way to zero. They work it down to a number that is, more manageable. And I think that might be some anchoring a little bit there, because if I put a 100% tariff on you and you get away with 15%, you might feel like the luckiest. You might feel like an expert negotiator at the end of that, even though 15 is more than zero. So
art of the deal, maybe. I don't know. We'll see. It's too early to. And I still don't like tariffs, but I mean, 15% isn't going to crush the economy, cause a recession, anything like that. So,
yeah, absolutely. So we'll see what happens, but we've been seeing a lot of foreign investment, man, from the Middle Eastern countries, Japan. A lot of these countries are just announcing that they want to be building in the U.S., which is really cool to see.
Yeah. Tesla. So what are you thinking?
Tesla. So Oh man, who was it? Was it? I think it was Joseph Carlson that posted today. Maybe I can find it. He was basically saying like a little tongue in cheek. He was saying like, oh, if Tesla has good numbers, they're going to focus on the numbers. If they have bad numbers, they're going to focus on like Optimus and autonomy and FSD expansion. I think they're going to talk about all of those things. I think the FSD expansion net and the pace of the expansion for FSD, sorry, the robo taxis, I mean, like that's going to be something front and center that they discuss. Elon has said in previous earnings calls that they are going to be accelerating their growth in 26, 27, and beyond off of the back of robo taxi and all of these developments that we're seeing, and obviously later Optimus. So I think that is, the prospects are still going to be on track. Tesla also announced a shareholder day to be held, I think, in November. They obviously are going to talk about Optimus towards the later half of the year. But I honestly, I don't know that the numbers are going to be terrific. I think the numbers can be very lackluster. And even in spite of that, the stock could still move upwards. The volatility is pretty high. I actually wrote covered calls today on Tesla, and you were still getting like pretty good premiums all the way up to like $400. It's like $80 away. So, I think the company, like always, will trade on narrative in the future. And I think Elon, like we've seen over the past 6 or 7 earnings calls, every time they've missed their numbers, he goes on the call, he pumps the stock with regards to the prospects, and the stock ends up green the next day. Now, of course, we could have a deviation from that trend if the numbers are really bad, but like we already know what the delivery numbers are. And I don't think that they're going to be, double or triple beating their numbers this quarter. I think the numbers are actually going to be kind of lackluster. But I think the prospects and the updates on those timelines are what people are going to be really looking forward to. And actually, while you say your thoughts, I'm going to bring up Say Technologies.
Yeah, so I agree with you. It's narrative driven. Elon, I'm very skeptical on whether he'll actually be wartime CEO and locked in for long. He's said similar things in the past. I think he means it. I think he means well, but I think he's way too optimistic on what he's able to do, split between so many different focuses. And so I don't think his attention will last long on Tesla, but it will at least through the earnings call for Tesla and probably, the next week or two. So likely, I actually did buy a little bit more Tesla. I didn't think I was going to, and I'm like, yeah, I'll do it. So it's still a tiny position for me. It's like 1.5%, maybe, tiny. Now, if Tesla goes the other direction, and I'm not expecting it, I actually don't think that it will. But if it gets down to 250 or lower, that's when I start DCAing back in and building out that position more, because I really like the product. I like the company. There are things that I don't like that I think are certainly bearish, but also they may mention what's happening so far in Q3 as well, because there's a massive demand lever that's been thrown forward because of these expiring EV tax credits. So they're going to post up some ridiculous, amazing numbers, but after that expiration date, they're going to slow down a lot for months. So I don't know. It's a weird position for me, but I'm just holding on to it, and it's longer term, and it's a small enough position where I care. It matters, but my preference is like, hey, let it go down, let me add. But I'm expecting it to go up.
Absolutely. Let's take a look at just some of the top questions here, and then we can pause and see if there's anything interesting. So this is for the Q2 2025 earnings call, which is going to be tomorrow, 5:30 p.m. Eastern. And the top most out of 2,100 questions, almost the top most voted retail question. Can you give us some insight on how robo-taxis have been performing so far, and what rate you expect to expand in terms of vehicles, geofence cities, and supervisors? So a robo-taxi question has the highest number of votes and the most number of shares represented. Number 2, what are the key technical and regulatory hurdles still remaining for unsupervised FSD to be available for personal use? Timeline. And number 3, what specific factory tasks is Optimus currently performing? And what is the expected timeline for scaling production to enable external sales? How does Tesla envision Optimus contributing to revenue in the next 2 to 3 years? Roy, out of those top 3 questions, was there anything with regards to their vehicle production, new models of vehicles, actual units that they're selling, like about demand? No, it's all around like these growth prospects. And this is why I say Tesla is very narrative driven, right?
Oh yeah, and like I love, like, this is one of those examples where it's still a very much a retail stock, but I mean they actually ask really good questions versus like every single time with Palantir, one of the top questions is when dividend. And it's like, guys, like, and you don't see that with Tesla for some reason. I don't know why. It's an intelligent base on X for both communities, but they actually get what's most important. Yeah, like I don't care about that. There you go. Yeah, I actually upvoted it because I'm like, I was actually going to be the one to ask it. Like they launched it real quick, and I'm like, I'm just going to ask, even though it's the stupidest question. It's inevitable. But yeah.
Yeah, I mean, look, if I go on the Palantir one, just because it's staring me in the face. If you look at the number of questions here, 42 questions around AI, 29 around dividends, 28 around stock split, 25 around company growth.
It's so dumb. I don't understand. Other than, you know, Tesla community is a little older and more established, and I think a lot of people, like, there's fewer and fewer of us OGs that were there, you know, in the trenches before AI, you know, really caught that wave with the open AI movement. So a lot of people are just like, hey, the stock is going up, I'm in.
Mm-hmm.
And that's fine to start with, but do due diligence and figure out like what you want out of the stock. If your goal is stable dividends, Palantir is the wrong freaking company for you, and you should get out.
Mm-hmm.
If that's your goal, I'm not saying it'll go up or down. I'm just saying if you're looking for dividends, you're looking in the wrong place, buddy.
Yeah.
Or, you know, be like Tevis, get 100 shares and make your own dividend. Sell covered calls, cash secure puts.
Honestly, it's a game changer. I was telling this to a friend of mine who he's like 26, 27. And I was like, man, like if I discovered selling options when I was your age, like I would be so much further ahead, because I've just been sitting on some positions for like 4 or 5 years while they've been going up, down, and in circles. And I'm just like, oh, well, I'm a long-term investor, so I'm going to hold on for the long term. Like, I could have been making money. But I am now, and it's a lovely thing because it puts less pressure on me to, like, on my positions to actually perform, and there's fewer, you know, voices around opportunity costs, because I'm like, well, like if it actually stays range bound, I would rather that, because I get my cost basis to negative numbers, and then who cares, you know? So
yeah, as the Schifer says, you could have 5 mansions instead of 4, Tevis or Tevis.
Tevis.
Yeah.
I'm 31. I turned 31 a few weeks ago. Covered calls is like the 8th wonder of the world, literally replacing my income with Palantir covered calls. And the beautiful thing is, Sherp, that when you bought a stock like Palantir, if you bought it in like, you know, $8, $9, even like $20, now that it's $150, bro, like relative to your cost basis, how much money you're making with covered calls is absolutely staggering, right? I bought HIMS, you know, at like $13, my very first tranche. And now I can make like $3 or $4 on covered calls if I write just even at like 25 or 30 delta. And I'm like, okay, well, if I do this 3 or 4 times, that's my entire cost basis, you know, for what I bought the stock at. It becomes crazy because the options pricing scales with the stock price. And if your stock's already done at 10x, then it's very easy to just, like I was telling this to Matt the other day because of Rocket Lab. Rocket Lab's at $50. He could write covered calls literally in one batch on Wkly's, and he can make his entire cost basis at $4.
Yeah, which is awesome.
It's insane.
There is a risk, you know, if the stock runs up high. I mean, that happened to a good chunk of my Palantir position. Went underwater, and I failed to roll one time, and so I have a lot smaller position, but still made a lot of money. Just it limited my gains. So there is a downside, but yeah, I'm usually cautious on positions I don't want to get out of. And sometimes stocks are so flat and stable that the IV is just not there. And so you like one, it was SoFi when it was much lower and not running. So
Yeah.
I'm not going to even sell covered calls. It's not worth the risk that something changes and it starts going up and I get those called away. Now I'm selling covered calls because there's movement on the stock and it's a higher price. PayPal is up for me right now, where I'm not selling covered calls. Like the premium is so. There was an exception a few weeks ago, but they're so low relative to what I think that the stock might be. I'm like, I'm just not going to sell. I'll make my gains otherwise.
Yeah.
All right. So Q&A time.
Q&A time.
All right. At the 1 hour mark, baby.
Yes. And we have 20 questions here bookmarked. So we're going to be doing fine as long as we don't have a PayPal question, because that's like 40 minutes.
Taco Friday said PayPal doing well. All right, let's talk about it for 40 minutes.
What's the quick covered call strategy? Yeah, look, I would write. So it depends. If I'm owning a position that I am okay to get called away, and I know I'm not going to roll it, then I'll probably go like 35 delta all the way to 20 delta. But if it's a position that I want to hold for the long term and I just want to eke out a little bit of income, I'll probably go like 10 delta, honestly. And that's usually what I do. I'll go maybe 2 weeks out or 3 weeks out and see what works for me. So for example, for Tesla, I'll write 10 delta on my long-term shares. And if it's in my wheeling portfolio that I acquired those shares through cash secured puts in the first place and I want to flip them, then I'll go like 35 delta because I'm okay to let them go, and I would rather just collect the premiums. Roy, anything you would add on to that?
I mean, look up the wheel strategy. That's like the simplest form, I think. What I like to do, at least with a small part of my portfolio, and usually on tickers I already own and like and understand, I'll will some back and forth. Usually in a tax advantage account too, just because short-term capital gains taxes are very different than long-term in the United States. And if I have a core position like for HIMS that I don't want to get out of, I've got to be paid hand over fist. So I'm going to either not sell covered calls on that or put the strikes so high, get pennies, but it does add up. Don't chase yield. So if you look at some takers, especially after huge moves, Open is not a good example because it's too small, and I don't know that the option chain is well enough developed. But if it keeps rising, let's do Rocket Lab. So Rocket Lab is one of those. If you're like, it's a great company, but if you don't know anything about it and you're just like, wow, these premiums are great, I'm going to sell cash secured puts, that's a huge mistake because A, you don't really want those to fill. So probably don't sell cash secured puts you don't want to fill. And B, like if something changes, even just the stock price does, you don't know that company. You don't know why it's moving. You don't know whether it's a credible dip and you're excited to own those shares or if the sky is ending. But, if you do due diligence and you hold Rocket Lab or you like it and you'd like an entry at 45 or whatever, and you write those cash secured puts, goes to 45, you got the shares or below, or it doesn't, you get the money. Like it's nice. So do it on tickers and companies that you really like, even if it's a lower yield than you would chasing some sketchy meme thing.
Yeah, and I think the taxes part is big here.
Oh yeah. Yeah, it does limit some of the things you do. You can't do poor man's capital here in the States on that, but yeah, I agree. I agree completely, Austin.
Okay. Cantonese Cat, what is the next open door?
I mean, it might be RKT, Rocket Mortgages. This is one, I saw a couple of questions on this. The reason why I mention it is just because it is moving quite a bit today. Now, there might be some news, but at least Robinhood Legend is saying, there's no headlines. So I think that what this is basically, I put open door here, by the way, just to kind of show it. I think this is a sympathy move from Rocket. I don't know. I don't know this company. I don't follow it. They also, of course, acquired Redfin, which, I mean, that's the best CEO ever. So I don't know that the acquisition is finalized. That could also be part of the news or the move. But ultimately, there's less competition here. And I think people are betting on the wrong thesis of Federal Reserve cutting rates and mortgage industry doing well. That's a flawed thesis. It just doesn't work. Now, I think there's a time when you zoom out and you look out, where Redfin used to be. A lot of these companies, and I think Open Door might join them, although they have plenty of cash and they can do an equity raise if they want to at some point. I don't know. I'm not saying that they will, but there's going to be a lot of consolidation in this space before I think the mortgage industry really heats up. So this could be something like the Zillow or the Rocket to look at, or just sell more SoFi, honestly. For when when it's just written off for dead, which it can go back to where it was before. I think that's the time to buy, not necessarily chase this, unless you're trading. So it could be and that's the other thing too. Is like it has a great ticker, which does not hurt retail. Pumping these things up of like Rocket. Like who doesn't love Rocket or Bull? Like you're bullish on Bull like that. It's a dumb reason, but it works kind of.
Well, since we're on Rocket, what do you think it's going to do at the open? It has a psychic short percentage, and technical analysis also looks like a breakout.
I might trade it. I'll have to take a look. Yeah, I mean, it'd be a small amount. It'd be like $500 or something. Like if I lose it.
There you go. You heard it here first. Roy is getting into the meme stock game.
I mean, it's a risk on environment, and I don't mind dabbling like here and there. So yeah, I do that with small amounts. Tevis bets on sports teams and different things, and me, just short-term stock moves.
Yeah. All my short-term moves go to UFC. Would you roll $23 SoFi covered calls expiring this Friday? I would not roll those expiring this Friday because earnings is next week. So why would you roll those expiring this Friday? It's not going to break 23, I don't think. And the reason why I don't think is because I don't have $23 covered calls, so it's definitely not going to break 23. Now, if you're saying next Friday over earnings, I would still probably not roll those because we might see a pullback after earnings, as we have seen for like 5 quarters in a row with SoFi.
Yeah, I would wait. Now, if it gets 223 or right there, that's probably the time to roll. Yeah, that'd be funny. And you can roll a little bit easier just because there's a lot of IV into earnings. But I mean, like, also if it's a massive run for you and you're like up 5x, you think about taking profits too. It just depends on your goal and you. But it's not wrong to take profits. It's not wrong to take some risk off the table. It's not wrong to have some cash. We will have a local top at some point. Maybe in the next few weeks, might be a few months, and you'll probably want to have a little bit more cash then. So. I also but that's what I'm doing.
I also don't understand why you would roll. Like SoFi is not at $23, therefore your covered calls are not breached. Generally speaking, you'll want to roll at some point where your break even is hit. So premium plus strike price is the point where you want to roll. So let's say you collect the 20 cents and it's at 23.20. Then at that point you might want to roll because you're like, I'm starting to go underwater, but you're not there yet. So I don't understand why you would roll. Like if and when you do get breached, let's say it's Friday and it goes to $23 and it's a Friday problem. It's not a today problem.
Yeah. Fair enough.
God damn it, Daniel. All right. What's going on with PayPal, Roy?
We addressed it at the very beginning. Rewind. It's just undervalued. Expectations are low. I think that the market over the last few days has been going 2 different directions. One is it towards value and the other is towards memes. PayPal falls in one of those categories, and it's certainly not a meme. So, and then Alex Chris posted a very interesting tweet. So look at what he said. They may be getting ready to shock the world, not necessarily over this quarter. This quarter, we know that there's some short-term headwinds, but it's really on how they guide. So,
yeah. Are we going to have a pullback next couple of months? I've trimmed my higher risk, quick buck stocks. I'm itching to buy, but thinking I'll wait, maybe.
That's the hard thing to do in a bull market is to have money on the side that you want to buy with, and you're waiting for the right time. I think that we probably will have a pullback. We'll have to see how far that goes. I'm not expecting in April, but a 5%, 10% pullback. And since I'm in more volatile names, that's going to probably be like maybe 15% of my portfolio. I mean, you get used to that as a retail investor eventually, but that's one of the reasons why, if things are running and you're making crazy money and you're hitting your goals, it's okay to take some risk off the table and say, okay, got shorter term options. Well, maybe look at selling those, or, you have a stock like you did open and you're like, wow, this is great. I'm up like a 5X. You can take money off the table. It's okay.
Yeah. And on that note, somebody asked for a portfolio update. I'm going to post something soon. Roy did a video. I might just do the same. I'm in the same boat, man, because I have, and I calculated it, I have 30% cash right
Oh
now.
my goodness. No, that's
But
including swings though, right?
no, but that's including my wheeling portfolio. Like if I look at what is the percentage of like non-committed cash, it would be like 5%. Because if I get hit on all of my cash secured puts, then I wouldn't be in 30% cash. But if I were to close all my cash secured puts right now for whatever they're trading at, whether it's a slight profit, slight loss, or anything in between, then yeah, 30% cash. And quite frankly, I kind of feel comfortable because I'm still capitalizing on, like, SoFi is 22% of my portfolio, Tesla's 15%, Bitcoin's 12%, HIMS is 8%, and then I have like Lemonade, Ethereum, Hood. So I kind of feel okay to have such a large cash position because of this comment that, okay, yeah, we might pull back and earnings is going to present some opportunities. And I also wanted to talk about UNH, but maybe we'll save that for another show because I wanted to make a video about that as well. Yeah, maybe I'll do a video here. So you guys have been buying again. Is that why the market tanked? Yes, exactly.
It's that guy.
Yes. Will we see HIMS $100 by end of year? Is that still my target? Absolutely, 1000%. That is still my target that I am tracking. I think we're going to hit it. I mean, obviously not financial advice, but I think this company is so poised to hit it. It's not even funny. Obviously, they have to execute, but I think they will execute. And once they do, with the short interest that we have on this company, I think $100 by end of year, all-time highs for HIMS, is not outside the realm of possibility. Time will tell, but if the rally continues, we get some rate cuts, we get these 2 new product lines, we get more commentary around the expansion internationally, and management continues to execute on their plan. Like, HIMS is an $11 billion company, $12 billion market cap. It's not a large company, and $100, I think, is definitely within the realm of possibility because we live in a world where Open Door is doing a 10x in 3 weeks. I think there's enough risk on appetite to send this to 100 if, in fact, it is based on actual fundamentals, in which case, for HIMS, it will be. So we'll see what happens on August the 4th when they report earnings, but it is absolutely still my target.
Yeah, the short interest doesn't matter. Like I think it can get to 100 without any regards for that. But Q2 might be a challenging one.
Roy, are you still in Lululemon?
It's in my swing portfolio. It's a longer swing for me, and yes, and it's not done well. So sometimes that happens.
Do you want it? Like, is it something that you're going to be adding to, or just you're keeping it like that position?
No, I basically, with trades, it's good to have a goal, whether it's time, amount that you're willing to lose, amount that you're looking to gain, and then you get out if something changes. So Lulu, it's not, and so the time expiry is not up for me. It's all options, vertical spreads at this point. I just decided to actually remove the and just do more vertical spreads, but because I don't think Lulu is going to break 500. So I sold that leg. I'm like, free money, why not? But yeah, I think that there's a turnaround story there. I think it's undervalued. I think it's underappreciated. I'm a little bit surprised that an activist investor hasn't stepped in, frankly, at this point. But we'll have to see.
I wouldn't be surprised if one does, honestly.
Yeah.
Sagig asks, is Tevis considering Broadcom? Man, I love Broadcom. I believe Tevis sold. If not, reconsidering, why not? Yeah, Broadcom was a position that I had when I had the dividend portfolio, and then I sold covered calls on it, and I let my shares go. I also wrote like in the money cash secured puts over earnings for Broadcom, and they jumped like 20% or something after that earnings. So made a quick buck there. Really love Broadcom. I love the prospects. Love the leadership team. It's just not a position that I'm in because I'm predominantly in smaller cap companies. But Broadcom, holy man, the run that it's done, it's absolutely staggering, right? Like, I remember back in December when they reported those earnings that they jumped 20%, and I made like, whatever I made through my cash secured puts. It was like at $200. And Broadcom right now is like 280. So it's been amazing to see the progress. But yeah, not in it currently. I'm not against going in it again, but probably would be swinging in back and forth as opposed to having it as a long-term hold because I'm generally in smaller cap companies. Roy, any thoughts on Lyft?
I have no opinion on Lyft. Yeah, I like Uber. I don't think it's bad here, even though it keeps hitting all-time highs. But Lyft, I don't know.
Mm-hmm. Yeah, a lot of UNH commentary here. I think we definitely need to make a video on UNH. You know what we're gonna do is I'm gonna reach out to Chris, and I'm gonna have I'm gonna invite him on, and maybe we can have an episode of Stock Tank where Chris presents UNH. Let me know in the comments if you guys want us to do that, and if there is enough desire for that, then I'll just reach out to Chris and I'll have him come on and talk about the UNH bull case because it's something that I'm in right now as a trade, and partially off of my conversations with Chris that I was having a few weeks ago. I think he's much more knowledgeable on it and much more well read on the company than I am. I'm still doing some homework, but yeah. Yeah. Okay. Let's.
Yeah, UNH. I don't have a position. Don't have an opinion. Other than I don't like insurance businesses as an investment for a variety of reasons. For moral reasons, as an investment strategy, there's a lot of regulatory risk, and it's not a space I understand well. So I don't know whether it's a value trap or a value. So when I don't know, that's when I don't go.
I mean, the entire healthcare space is like absolutely ridiculously oversold right now. And so I think you're going to find a lot of good opportunities in that space.
Yeah. What's interesting is like HIMS is adjacent to that space. It's depending on like what you look at.
No, because it's not
right.
because HIMS it catches the GLP-1 wave.
Oh yeah, but I mean, like I'm just wondering if there's some overhang on HIMS just because of that whole sector being sold off. I don't know.
I mean, it could be. It's an interesting thought. Roy, we want to hear your thesis on ARHR and if it's too late now.
AEHR. So
AEHR.
Yeah, I'll just give like a little thing of what they do, why it pumped today, and what I did. So this is and I'll make a video on this. I'll probably need a couple of weeks. I'm in the invest and investigate stage, which is a Stanley Druckenmiller concept, and it's one that I knew of, but I didn't implement at the right time in the right way. As a result, I missed Rocket Lab because of that. Because Matt Money said, "Hey, look at this." I finally did it, like 4.5. It ran up to 7. I was like, "Well, it'll pull back. I'll get it." Then, no, it never pulled back. Had I invested, then investigated. So that doesn't mean you go in blind and you just YOLO on companies. It's no, you do a little bit of digging. You're like, this is compelling. Put a little money in. It'll almost force you to look. Put enough money in there so you'll actually look, but not enough that like if you get out and it goes down 10% that you're crushed. Don't do options or anything that's leveraged. And that's what I did with air test systems. The setup, it's interesting. So what they do is they sell the main thing of what they do is they actually sell machines that ship to the manufacturers of chipsets, and they do the burn-in and they do the testing as well. They're in-house in the manufacturing thing. And so previously a lot of their positioning was on silicon carbide chips, which are largely EVs. And of course, there's a lot of headwinds against EVs right now. And it seems like it's something that's continuing to get worse. Now, they've been around a long time. They're a profitable company. The market cap is like $500 million. And at the time when I invested in them, they were like at a 12 PE. And I'm like, okay, so just based on the little bit I know, it's enough to put a little money on there and continue to dig. What I've really liked is that they have a very clear understanding of where the industry is going and where it's headed. They're not betting as far as their systems on like, okay, it has to be gallium nitride or silicon carbide or what is it? Like there's some sort of photonics that's used in telemarketing. These names, I'm new to it, so I'm going to mess it up. But it doesn't really matter which of those wins. Air provides testing for it. And where they're differentiated, really gallium nitride is where they pivoted. And those are largely the AI processor chipsets. What they launch, and they're actually the only ones that have done this. There will be others. There will be competition as well. Rather than test each and every individual chip set after it's cut, and they actually have microchips. There's, and I don't understand the science here. It's something that I'm still in the investigation phase. So, but there's a limit on the actual chip size, and the way that a lot of the hyperscalers are actually going around this with data centers is they're producing what are microchips, and a lot of times you'll have to test those on an individual level, which takes time and also a lot of electricity. So for other types of chips, they test them at a wafer level. So rather than cut out each individual chip, they're like, okay, here's the whole sheet. Let's test this all at once. So that's harder. And they didn't even know if it was possible with gallium nitride, which is but they figured it out. And they not only are able to do it at the wafer level, they're able to do a wafer. So an entire set of these, it's either 6 or 9 wafers at a time. I think it's 9. I was re-listening to the earnings call on the drive back home today. So, and they're the only ones that can do this. Now, there are others that will come, but so they mentioned this in the earnings call as a possibility that people were looking at this. And specifically today, they announced a agreement. So a lot of their volume, by the way, is from selling these units. So it is lumpy. They also do have some recurring revenue. The simplest explanation is it's kind of like selling the printers, which is this. And then you also need a toner. So it's not exactly the same thing, but that's essentially what it is. They have components that wear out and you have to continue to be buying all the time. And so they have some recurring revenue too. And of course, the more systems they have out there, the more recurring revenue they have. They actually have increasing amount more and more. This is interesting because today was announced that the Sonoma units, which test and do the burn-in and the production test as well for the AI processors, they're the only ones for the gallium nitride that that they can test on the wafer level. And so there's a lot of advantages to this. So right now, like the thesis is basically this: there is a gold rush and an arms race as it relates to compute and compute power, and they're very constrained. And one of those limits is this testing and burn-in process. If you rush it, the challenge is usually when then you integrate or you package the product and whatever it is actually fails, you throw out that whole thing. So you lose a whole bunch of money. And there's a way too, since they're testing the entire wafer at once, it actually saves a lot on electrical costs. You can do the process a little bit longer, which catches some of the failure a little bit more. And so, he mentioned, of course, the CEO mentioned the size and scale of many of these manufacturers, where even if you have a 0.1% increase in your output, that has phenomenal ramifications for them. And since they're the only ones that can do this, I don't think this is going to be the only headline that we see of this. It's enough of a specialization and it's challenging enough to do that this is not something that most companies are just going to try to do in-house. They're just like, okay, there's a gold rush right now. It's kind of like, the gold rush in California when it happened in 1849 or whatever it was. People ran over there and they weren't saying, I'm going to pan for gold, but to save some money, I'm also going to create my own pickaxe. Well, no, that would be stupid. You can make stupid money just panning for gold. So these guys are the picks and shovels, basically, of the silicon arms race. And they're just impressive in their competency. They're impressive as far as this gallium nitride. It doesn't matter what chip actually wins. They understand the space. They understand the industry. They have a differentiated product. They don't overpromise. They've been in business a long time. And there's some pretty interesting tailwinds that are happening. Now, I still think that they traded it below where they should be. And a lot of that is because of guidance. They were a little bit cautious with it just because of tariffs. They do have international customers that are trying to figure out the tariff stuff, and that can persist for a quarter or two. And there is a slowdown in the silicon carbide chips, which are mostly in the EV type industry. And that's where last year, I think they had 90% of their volume on that specific type of chip. Now it's, I think, 40%. So it's a mixed shift there. But yeah, I like them. I actually, when the news broke this morning, I'd already thought about increasing my position. I was like, well, let me wait. Let me do a little bit more due diligence. When that news broke, I'm like, okay, they mentioned this in the earnings call as a possibility. We're now seeing it. It's one thing to say a company is interested and they're in the pipeline and they're testing things. It's another to have this press release where they're like, hey, we're selling a bunch of these systems, where they're a clear leader and a lot of people are freaking interested. So I'm like, okay, that's enough. I'm going to buy. I bought at 17. It's at like $20 right now. Because I looked at that and literally I looked at the company long enough. I'm like, this is $20 news at least. And it turned out to be that way. So I wish I kind of bought more, but it's not going to be a massive position for me because, again, I've not finished with my investigation fully. I need to go through the SEC filings. I need to look at previous earnings calls as well. I've not done that yet. I want to look at some other industry experts. And there's always concepts that I'm like trying to figure out is like the silica photonics. Like I have no freaking idea what that means as far as a chipset. It's not a major source of revenue for them, but I'm like, it sounds science fiction. I need to dig in more, but that's the bare bones of what I'm looking, why I've been interested in this company. And it's trading at like a 20 PE. It's not ridiculous here.
So is this something that has the potential to be a long-term position in your portfolio?
Oh, yeah. So the invest part and then investigate, that can turn into a swing, and it usually does. That was eToro for me. eToro, I went in. I was actually thinking that would be a long-term position. And it's just not the same quality company as Robinhood, even of Webull. It's like a lower tier. And so I'm like, no, I'm going to get out, made some money. It's like, that doesn't always happen, but that's great. This one, I was like, I don't know. It's an area where I've had to put a lot of time into it just because I don't understand. I'm like, okay, well, like, okay, by wafer, are you meaning this sheet? And I look in and I go in, by the way, that's one of the things that's really nice. You have to prompt engineer it. But you go into a few different AI models and you say, this is my thesis, blow it up.
Yeah.
And it helps you figure out the weaknesses in some of your arguments. And there were some things where I'm like, oh man, I completely misunderstood this. So that has been very helpful. And then going back through things a second time, like back testing it. So yeah, this is for me now a long-term position, I think. Now, again, if I see something in the SEC filings or previous earnings calls where I have a lot of concerns, and I also do need to look into one of their larger competitors, which is not nearly as specialized as Air. But yeah, in that process, if I see some red flags, I'll be like, okay, good enough, made some money, I'm out. But I think that this will be like a 3 to 5% allocation for me and a long-term hold. But we'll see. Like, I'm new to it. There's a lot of things I don't know.
Very cool. Yeah, no, something to add into the radar. So is this the next thing you're pounding the table on then?
No, I'm not pounding the table at all. I barely posted on it just because I don't want people to follow me in a trade just not knowing what you're doing. And I mean, like that happened with Webull, where honestly, I did the due diligence and then things change, and I'm not going to be like, well, I'll just stick with it, even though I see things differently now. I'm going to always be honest, don't always get it right. But yeah, this is one where I think it's a quality company that's positioned very well. Doesn't mean everything's great and golden, and it doesn't mean I understand everything. So maybe in a 2 or 3 weeks, you guys will see a more detailed write-up and video. I might do a short video on this, just like the invest and investigate when it worked out well, and then Rocket Lab where I failed to do it and I messed up. Because I think it's a very important thing to do in a bull market, because you can start, it depends on your investigation process, but you can start, do like a little 1 hour research and say, okay, good enough. All right, Randy, I hope it works out. It's a micro cap too. Like that's the other thing is when we get a local top, no matter the quality of the business and the headlines, this is probably going to pull back some. Now it may not, but I'm happy to add there too. I've got room to add up to, I think it's like 2.5% to 3% right now. A lot of it's because I'm up like 40 or 50% in it. But yeah.
Very cool. Okay, just a few more questions, and then we will wrap it up. Maybe just do 3 or 4 more questions, I think. Do we have any thoughts on C3.ai? I personally don't.
Oh yeah, I do. Tom Siebel is a snake oil salesman. He is great at that sort of thing, but when the AI arms race really got started, I was heavy in Palantir. I was also paying attention to C3.ai. Some people were, and I'm like, hey, they got a great ticker. They've changed their entire business and ticker a number of times. They seem to always try to catch that next big thing. Siebel always overpromises and usually underdelivers. I'm not saying what they're doing has no material value. I think it does, but I don't think that that's a high quality business. And I think leadership is really sketchy and bad. So for me, the most I would ever do is trade C3.ai, which I did, by the way, previously. I made bank on puts with them before.
Well, there you have it. Do you think SoFi is going to announce new products after the earnings call? Greg asks.
I mean, like right after, no, but I mean, over the next quarter, sure. I think loan platform business is going to spin out some additional new products.
I'll take the other side of that. I think we're going to get, I think DDI was posting earlier today about this as well, and I agree with him. I think we're going to get some cash coach. I always mess this up. Cash coach news on earnings day, probably a rollout. They have had press releases that coincide with their earnings reports in several of their previous earnings reports. So I wouldn't be surprised if today's no different. I could also see news around new loan platform business deals that they've done that they announce on the back of earnings to talk about the progression of the loan platform business over the next quarter. But we know SoFi will periodically save pieces of news so that they can take advantage of the news cycle, because Anthony Noto does his rounds on CNBC and Bloomberg and Yahoo Finance and talks about not only the quarter, but also talks about the prospects of the business. They've done this with credit cards where they announced on the same day as earnings. And I think this time around, we could see something with regards to Cash Coach, or we could see, similar to what they've done in previous earnings reports, new loan platform business deals that they drop on the same day as earnings. So we're going to see what they do. But usually when they drop it on the same day as earnings, they drop the press release a little bit later on, but they talk about it in the earnings call. And that's where they sort of break the news to whoever's listening to the call. So I think that they will announce something. We'll just have to wait and see.
Yeah, it's just weird to me. There's so many things that are exciting with SoFi, and they just don't really announce, or they kind of announce and act like it's no big deal. I'm like, I don't get you guys. And then sometimes they'll have a press release which is like over the top, and I'm like, this is like a tiny thing. Like, why? And they've done better. They've absolutely done better, especially with the loan platform business and announcing those securitizations. But we'll see. The company's doing amazing. So,
yeah. Okay. Have you ever looked into Elf?
Briefly, I don't use a lot of makeup, none. So invest in what I know, and I don't know that. I asked my daughter, who's 12 and not too into makeup, but she has friends that are, and my wife, who doesn't need makeup because she's just naturally beautiful. But they're like, yeah, it's a good product. It's fine. And like, okay, I don't know.
Yeah, the extent of my Elf knowledge is that Manuel picked them in the 6th round of our stock draft because he was really bullish on them doing a turnaround. So that's pretty much it. I haven't really looked into Elf. Sagi asks about AMD. Have we looked into it?
Mm-hmm. I did. I like them, but NVIDIA, I think, is a clear winner here. And so I decided, rather than split between the two, which I don't think is wrong or bad, I just like concentration. So I would just do more in NVIDIA. And I don't have like an insane amount of NVIDIA. And even though it keeps hitting all-time highs, I don't mind it here. So I'll probably, if we emerge earnings season, there's no discounts, no deals, I'll just buy a share or two, maybe a week for NVIDIA, just start stacking it slowly. AMD, Lisa Sue's amazing, but give me Jensen.
Yeah. Final question. Have we looked into Zeta? We actually got an email about this, Roy, you and I, about. Yeah, I haven't really looked into Zeta. I mean,
go ahead.
Well, I looked at their earnings report and just their latest earnings report, just skimmed. I just haven't had the time to look into Zeta. Elijah is trying to get me into Zeta. He's been talking about it nonstop, basically.
Yeah, I don't know. Like the numbers look good, but I don't know. I've not looked into it long enough to have any firm opinion. I have concerns, not with Zeta specifically. It's international, so it makes it a little bit harder too. But they seem solid. I
Mm-hmm.
don't know what their advertising model is. I don't understand it well enough, and there is disruption that's happening, especially on the web with AI agents and LLMs as it relates to advertising on the web. That I don't know that that's their model. How much of their model that is. So, yeah, I don't have deep thoughts on it.
Yeah, I mean, at some point, I'll probably take a look at it, and then I'll either start making content about it, or I just will decide I'm not really interested in it. Okay, let's wrap there, Roy. What do you think?
Yeah, sounds good. And I'm not buying ChargePoint. No.
Yeah, not buying ChargePoint. And then with regards to UNH, we might make a longer episode about it. So stay tuned for that. Thank you, everybody, so much for watching the show. We will see you next week on Tuesday, time TBD. And probably we'll be talking about SoFi earnings next week on Tuesday because they're also on Tuesday before the bell, which is going to be fun. Thanks
And
again.
This company too.
And that company too, which Roy is ditching SoFi for. So at least we'll have the full take. He'll talk about PayPal for 40 minutes, and then I'll probably talk about SoFi for the remaining amount of time. Follow us on the links below if you want to stay in touch. I'm honestly, Roy, I'm finding like I'm making more shorts on TikTok. It's like it's so easy to do it, man. I just point my phone at me for 1 minute and like just share some thoughts. Hey, this news came out. This is what I think. Okay, bye. And like, I'm finding I'm making more content there. So if you guys aren't following, then definitely follow me there.
And on his TikTok channel, like he doesn't do stocks; it's all dancing to music. Yes.
One of my already like my fourth video, it got copyright. Like they got blocked because they're like, you're doing a financial scam, and I was like, I'm literally not. I'm only talking about my covered calls that I wrote, and I was like, oh man, why am I doing this platform? Because they're like, so you can't talk about stocks because they're like, no, if you're not dancing, we don't want you. Anyways, thanks everybody.
Dance while you do the stocks.
See you next time.